Going ahead, given that we are coming from a low base, I think a 12 to 15% kind of earnings growth is likely to happen in 26. Now, on that kind of scenario, you can easily assume that Nifty will definitely outperform this 15% number. So, a 15 to 20% kind of growth next year for Nifty is not really challenging.
The market was led by capex-driven stories for the past 4 or 5 years, up until I would say 24 or early 25. That situation may not continue going forward, whereas there will be select pockets within those capex-related stories which will still continue to deliver earnings and which will continue to probably outperform. One needs to be a little bit more selective in that pocket. Whereas consumption probably will be the one which will drive the economy as well as markets from here on.
My working number on the Nifty from a more medium-term perspective is 27,500 that I've maintained all along. And my longer-term working number for the next year is about 28,400. Now, that's about 12-13% away from where we are. And I think these are realistic targets that I want to work with. And it's not going to be about the Nifty, as I've highlighted multiple times. It's going to be about stocks, sectors, themes, pockets. And if you are in those right pockets, led by, say, banking, by metals, led by PSU, autos, is where the real money will be made.
Play consumption, I don't think we are that keen on, because those are straightforward stories like FMCG or for that matter consumer durables. I think all are expensive. Both these sectors are expensive. So we look at derivatives around it: hospitality, healthcare, tourism. These are the ones which we are betting on. Platform companies. I think that's where you need to go.
Good US tariff deal which removes unjust import duty levied on India for import of Russian oil, ignoring the fact that European Union and China is much bigger buyer of Russian energy. If that does materialize, there will be relief rally in the market. Now, please remember, market discounts rumor and sells on fact. So relief rally can happen in expectation of tariff deal, or if it is not discounted, it can happen post announcement of tariff deal. But certainly tariff deal could be one trigger for market to go up.
1 year and 5 years, we are very, very optimistic about India. We always say that something has changed in India. So India valuations are expensive and remain expensive, at least for maybe for another 22 years or so. That's the way we believe that when the demographic cycle peaks out in 2047, till the time this P multiple for India will remain elevated. Now, let's not get confused with long-term perspective with the short-term, because investors, it is our responsibility to generate returns. Okay, that's our core business. So that's the reason I say I will review the same, maybe the beginning of January or mid of January.
Markets are at peak power.